episode 37, and this week we look at exactly what is an initial stake pool offering. Hey, and welcome to the Learn Cardano podcast, the podcast where we break down all the ins and outs of Cardano so that you have a better understanding of some of these mechanisms that are existing in the Cardano ecosystem and unique to the Cardano ecosystem. This week, we're looking at what is an initial stake pool offering. If you're already familiar with the Cardano ecosystem and how things work, this probably is something that you're familiar with a lot of the ISOs, the initial stake pool offerings that have been happening recently since early March, I think, of 2021. I think it was around then. All of these ISOs have appeared and offered different tokens, etc., in exchange for your ADA rewards. But this episode is for all of those people in the ecosystem that don't know what it is. It was clear from an article that Cointelegraph did that mentioned that Genius Yield had raised over 118 million in their ISPO in their first 48 hours. And for all of us in the Cardano ecosystem, that makes sense. It's pretty easy. You want to get your ADA before a particular epoch ends, so you move it all in. And hey presto, you have raised a lot of delegation, but not actual ADA for your project. So that's a very clear, distinct difference. And we will be getting into all of that and explaining the whole ISPO model, how it works, pros and cons, benefits, etc., later in this episode. But first off, let's get into some news for this week. First off for this week, a simple public service announcement. If you are still delegated to one of the meld stake pools during their ISPO, if you're still delegated right now, you need to move your ADA. They're closing down their stake pools probably by the time you listen to this podcast episode. So they would have already closed it and you'll be missing out on your ADA rewards and you won't be earning any more MELD tokens either. So it's really important that you do move that delegation now. At last check, some of these pools still had about 3 million ADA in them and there were 10 pools. So maybe roughly around 30 or so million ADA still sitting in MELD's stake pools. And they're going to close down. So you got to move it. You got to move it. You do have a choice. You can move it to another ISPO. There are plenty active at the moment. You can check out the show notes for this one. I do mention some other ISPOs that are active right now, and you can check that out at our website at cardanode.com.au/EP037 for this episode's notes. You can check it out. And if you don't want to delegate to another ISPO, you can actually delegate to our stake pool. So that is another option, just earning those awesome ADA rewards. Search for the ticker ADA Oz and you will be able to find our stake pool. So move your delegation from MELD. It's time to do that. Over the weekend, we also saw two rather large projects launch on the Cardano blockchain. They're NFT sales. One of them was ADA Handle. It's a protocol that is written to give your wallet address a vanity URL or a vanity address so that people can send it directly to your name. So I've been talking about this for quite a few episodes now. I mention it every now and then, but they did their main sale and it was, I guess, came with mixed emotions in regards to how it was done. The process required the user to register their email address and that would put them into a queue. And that queue process would then send them an email telling them that their turn in the queue was coming up, and then they'll be sent another email that would actually let them into the queue and give them a 10-minute window to be able to purchase their NFT, their ADA handle. A lot of people were quite upset with this because the process took so long. Some people were waiting 8-10 hours for that particular email to come through, and some of them didn't come through at all. And there are a lot of disgruntled people. You can check out the Twitter link that I've embedded into the show notes to see the type of response that people had. A lot of people did get their ADA handles and they were absolutely fantastic and people absolutely loved them. I managed to get Pete. So if you want to send me some ADA, you can use your NAMI wallet or your CC Vault wallet And you can, instead of typing in that long string of address, you can just type in the $ and type in the word Pete, my name, and it will automatically work it out and send ADA to my address. How cool is that? So it's a really cool service, and a lot of people missed out. But not to worry. That initial sale was a beta sale, it was a test sale, and the final sale where it will go to the full public and be open always is coming later down the track. So if you missed out on this one, don't worry. You'll be able to get it at a later date when they fully open their platform and allow everyone to buy anything they want. In another news item, Messari, a crypto research company that provides data and tools for anyone that is investing in cryptocurrencies, put out a 165-page thesis report. And this is the crypto thesis for 2022. It covers everything in the crypto landscape, its predictions, and everything that might happen in 2022 across so many different blockchains, except for Cardano. It mentions Cardano briefly in one sentence, and let me just pull it up here. Cardano is in the top 10. So this may seem like a slight, but not a single person in my network recommended I replace a section on Sol.Luna or Atom with ADA. If anything, Avalanche was the first bubble team slighted for the big dance, though we'll be dropping a big report on them soon. And that was it. That was the only mention of Cardano. Can you believe that? So purely because no one else told this report writer to look into Cardano, no investments were made. Now, who were these people recommending the research to look into it? It could be anyone from VCs to investors in other chains, or probably not anyone in the Cardano ecosystem or anyone that is developing or working on Cardano or in Cardano, and hence no one recommended this person to look into it or a buy or anything. It's a very strange report. It's very good in what it covers in regards to everything else, but the fact that it omits one of the top 10 performing cryptocurrencies, and the person didn't even do a little bit of research into it, that's what it seems like, is a big slap in the face for the Cardano community. I will put a link to it and I'll let you decide. There is a lot of Twitter conversation around it, but have a look, have a read, form your own opinions. Tell me what you think. Was this a report controlled by venture capitalists that are invested elsewhere in different chains and not invested in Cardano? So they try to push the report in particular areas so that other people that are investing in the cryptocurrencies would ignore Cardano and invest in the chains that they're invested in, which means they can exit at some point in time at a higher price. Maybe, maybe not. I don't know. But let me know what you think. Leave a comment in the show notes, leave a comment on the YouTube channel, and let me know what your opinion is in regards to this. Why did Messari leave out Cardano altogether? Another top 10 performing altcoin in the cryptocurrency industry, barely a mention. Now, before we get to the main topic for this episode, I do want to read out a podcast review. I finally got another one. It's really good to see. This one is titled, "A Must Listen If You Like Cardano." Every episode is a detailed and coherent rundown of something in the Cardano ecosystem. Great work. Now, if you want to leave a rating and review on the Apple Podcast Network, please do. It really helps with the discoverability of the podcast. Or wherever you're listening to it, please give us a thumbs up. It really helps with the algorithms there and helps other people find our podcast. Now, if you want to leave a voice memo as well, you can. You can go to our website, click on the contact page, and there is an ability for you to leave a voice message, ask a question, and we can include it in the podcast as well. Now, that is it for the news for this week. Please make sure you check out the show notes at cardano.com.au/EP037. You can find everything I've mentioned in this show right there for you. Okay, let's get into the main topic for this week. Initial stake pool offerings, or ISPOs. They're a unique fundraising model that only exists in Cardano. A user can delegate their ADA wallet, their balance of the ADA wallet, to a particular stake pool that is providing the ISPO service, and in exchange for your ADA rewards, which you normally would get, you are going to give up all of those ADA rewards and give them to the stake pool operator, and in return they'll give you a particular token instead. So this is a very unique and fairly safe way of participating in a token sale and token launch. In comparison, traditionally, when I say traditionally, only the last 3 years, the way that people have been doing this is through ICOs or initial coin offerings, or that has evolved a little bit to initial decentralized offerings where they're doing it through a DEX. But you'll be able to exchange your Ethereum, your ADA, your Bitcoin, whatever it might be, for another token, the token of the project that you're investing in. Now that makes you and requires you to release your ADA or release your cryptocurrency, give it up, and then accept the new one. Now there is that huge element of risk. Is this project going to do a rug pull? As in, will they run off with all the money, pull the rug out from the project and disappear? There is that possibility, and it happened quite a lot in the 2017-2018 bull run when ICOs were everywhere. Every single project was doing an ICO to raise funds, and a lot of them didn't make it. A lot of them disappeared in a few months, maybe a few years, and it was rampant everywhere in the ecosystem. In terms of the ISPO, it is a lot safer. You have your ADA, it may be 100 ADA, it may be 10,000 ADA or 100,000 ADA. All you need to do is delegate it to a particular stake pool, give up your rewards, which you normally would get, and in exchange, you get tokens. Now, this is quite different in terms of the time period that it takes. An ICO and IDO will be over within an hour, a couple of hours, whatever it might be. And the project would have raised all the funds. They'll be holding on to their cryptocurrency, the ADA, the more valuable one, and giving out their tokens. In terms of an ISPO, this happens over a longer period of time. Because the amount of rewards that a wallet would generate over an epoch is quite small, it takes time to gain all of the ADA rewards or enough ADA rewards to actually develop and build a project. If we look at other ISPOs that have happened in the Cardano ecosystem at the moment, the MELD ISPO, which has recently ended, went for approximately 36 epochs. So that's 36 5-day periods. Now, if you look at each one of those 5-day periods, they earned maybe around 40,000 ADA per epoch per pool that they had. Now, I have done a little bit of math here. Yes, I can do math. And I worked out approximately how much ADA they would have raised each epoch across 10 of their stake pools that were fully saturated, so that it was up to the brim, the maximum amount of ADA that they could hold in terms of delegation. So if it was around 40,000 ADA that they were gaining, and they ran 10 stake pools, so that's 400,000 ADA that they were gaining every epoch, and if it went for roughly 36 epochs, that totaled 14.4 million ADA over that time period. And if you do the conversion to today's currency rate in US dollars, that works out to be around 18 million USD. So that's quite a lot of money. But don't forget, they raised a lot of this capital while the bull run was still happening as well. So as the price of ADA was going up, creeping up to $3, they were still earning the ADA rewards at that point in time. So it was a lot more valuable back then. I don't know what they did with the ADA, whether they cashed some out, paid the tax for it at that point in time, which they probably would have, and kept on doing as price fluctuated throughout the 36 epoch period. So that is probably what they did, but they raised at least, at minimum, at today's price, which is fairly low compared to what it was, 18 million US dollars through this entire process. I highly suspect it was a lot more. So you can see it was a fairly easy process for them to raise it, and Not one person in that entire ecosystem of participating in the Meld ISPO released any of their funds, nor did Meld hold onto any of their tokens or their wallets or funds. Nothing of the sort. It was a very safe approach to raising that funds. It did take a long time, but it has its trade-offs. Other projects that went for a token distribution model through stake pools, through the ISPOs, one of them was called MinSwap. So MinSwap, I've done an interview on, and you can check that out in the previous episode. I'll put a link to it down below. But they went for a purely distribution model for their token. So because they're building a decentralized exchange, the more people that have their token within the ecosystem, the more liquidity they can possibly get when people come in, stake their Min tokens for the MinSwap DEX with ADA. So that would be a trading pair. So more people that do that, the more liquidity they will have on their pool. So it's really important for a DEX to distribute their tokens out like this, so that everyone can participate in the ecosystem, provide liquidity, and provide swaps. So that's a whole idea and premise there. They did a slightly different approach. Instead of building up and creating their own stake pools, they leveraged stake pool operators that already existed in the ecosystem. So they partnered up with all these pools. They found a lot of stake pools that were below the 2 million saturation point. So they only had around 2 million ADA delegated to them at that point in time, and then made them their partner pools. So people started flocking to all of these stake pools because they wanted these MinSwap tokens, these Min-T and these Min tokens. And these pools started filling up. The MinSwap teams started doing the tracking on the blockchain to work out what wallets were where on these particular pools and work out exactly how much of a distribution they needed to do. So this is essentially what Ethereum people see as an airdrop. If you're holding on to a particular token or you've got your wallet somewhere, you will get this particular airdrop. This is working in the same way. So all these people were delegating to these particular stake pools. They were still earning their ADA rewards in this case, and the MinSwap team were tracking what was happening so that they could automatically distribute the tokens accordingly. So slightly different to a complete ISPO where they're taking all the rewards. In this case, they were using and leveraging that same mechanism and model to distribute their tokens out. SundaySwap are doing a very similar thing. They ran a competition, a marketing campaign to try and get the best stake pools out there to be able to become SundaySwap scoopers, who not only distribute their tokens, but also operate the decentralized exchange. So they'll be operating the code on the network, collecting the transactions for their DEX, and then processing them as well. So it's a little bit of a different mechanism because they need to actually be a part of the decentralized exchange as well. So it's a very interesting setup. But you can see and understand that the ISPO model works in many different ways and really is a good way to distribute tokens out there and actually act as a fundraising mechanism as well. So there are some key benefits of running an initial stake pool offering. So firstly, one, any Cardano holder can participate in the ISPO in the same way that you would delegate to a stake pool for rewards. You simply need to delegate to one of the stake pools that is a part of the ISPO. It's a very low risk mechanism. So this is point two. It's very low risk. Any user can participate, and you don't lose any of your ADA, you don't lose any of your cryptocurrency, you're only giving up your rewards. And this doesn't ever touch your wallet. It's external to your wallet, so nothing actually leaves your wallet. So it's a very cool mechanism and leveraging what is available on the Cardano stake pools itself. Point three, it is completely non-custodial. So the ADA always stays in your wallet. It never leaves, it never goes to the stake pool, it never goes to the actual ISPO. Always stays in your wallet. And in saying so, please watch out for scams. People will always try and take your ADA, tell you to send it to a fake address that is a part of the stake pool operations, whatever it might be. And unknowingly, you could send it off and hey presto, you lose all your ADA. So ADA should never leave your wallet in any staking mechanism on the Cardano blockchain. Point 4, there is no lock-in period. As a delegate to an initial stake pool offering, you can sell, you can buy more, you can do whatever you want with your ADA. You can buy NFTs if you want, you can load up your wallet with the NFTs. You have that full flexibility. No lock-in period, and that's really important. You can move to another ISPO tomorrow, like something else pops up and you're more interested in that because it is a real fi project that is helping building homes as well. So it's something like that might come up, and if you really want to, you can move at any point in time. So you may still get some tokens from your initial delegation with your first ISPO. So, you can mix things around. You can move things around and earn a whole bunch of different tokens from other ISPOs that are all happening at the same time. Now, there are some also added bonus benefits for the actual projects itself. So, 1, community building. So because these ISPOs range over a long period of time, from a few months to a half year or even a year, because it takes so long, you need to actually engage with your community. You need to continuously talk to them, engage them, make sure they don't leave. So this is part of the customer retention process. So you get them in, they're starting to delegate. Now you have to make sure that they keep on delegating, and engaging with the community does 2 important things. 1, of course, keeps them delegated to your pool. 2, educates them about your project. So gets them excited, makes them become champions of your project so they can go out and talk about it and potentially get you more delegates for fundraising. So it's a very key thing to build up that community. Now, the second point there as a project benefit, the marketing. So you have to attract these delegates and you have to get them to your project. So if you're doing heavy marketing to attract delegation, as a byproduct, you'll also be doing heavy marketing for your own project. So they go hand in hand. Get the customers in and build the community. It just simply flows that way. Now, of course, there are some downsides in running an ISPO. And from a delegates and operators point of view, these are a couple of them. So first off, technical knowledge. You do need to be a good pool operator to ensure that block production and rewards happen all the time. There's no point of setting up a stake pool and then suddenly not producing any rewards for an entire month. And I've seen prominent YouTubers out there set up stake pools in the Cardano ecosystem and completely balls up their system. So it doesn't work for an entire month. Anyone that was delegating to that particular stake pool would have lost all their rewards. And it was plain as day because you can see the rewards that come out every single epoch. You can see the graphs, you can see the data, you can go to adapools.org, you can go to pooltool.io, and all the information is there. You just punch in the pool ticker that you're delegating to and you can see those rewards. I do have links about that. See them in the show notes. So that's another pretty important thing. You do need that technical knowledge to be able to run a good stake pool for collecting these rewards. The other disadvantage or downside to an ISPO is the length of time and the price fluctuations. Because you need to run it for a long period of time so you can collect a decent amount of ADA, you have to deal with the price fluctuations. Now, as you know, in the cryptocurrency space, prices go up, prices go down. It's a big roller coaster ride, but if you're collating funds in a rising bull market, eventually that will turn and go back and reset itself, have that big shakeout that you always expect every single week, and you have to deal with that. So you have to budget for a particularly large amount of drop in the market so that you have a baseline fund and know exactly how much money you would potentially be holding onto at the end of this ISPO. So you have to really do your budgeting forecast based on market cycles. Not easy, is it? Now, the last disadvantage of this system and the setup is the centralization of delegation. So when the Meld project was launched and at its peak, it was holding on to 650 million ADA in terms of delegated ADA to their stake pools. So 65 million is the maximum, and they managed to pretty much max out 10 stake pools, and in total they had around that 650 million ADA delegated to their stake pools, with people earning those Meld tokens. So that is absolutely incredible amount that they raised. Very, very good marketing and sales speak there for sure. Now, are these initial stake pool offerings good, or are they bad for the Cardano network? Now, it's really hard to ignore the impact of these ISPOs. Now, when the Meld ISPO started, or any of these ISPOs started, we saw a lot of the delegation move away from single stake pool operators and these low saturation pools, all going to the Meld ISPO, or whatever ISPO's flavor of the month is. So this happens because of what the delegate is after. So if the delegate isn't after just their basic ADA rewards, they're looking for something else. They're looking for potential projects that would rise in value. So ADA has risen in value by quite a lot. So I bought in at 2 cents or 3 cents, around that mark. And at today's price, it's at $1.27. So that's risen a huge amount. But for people that are getting into the ecosystem right now, what is their options? What is their choice? Or even people that got in way back then, what is their option and choice? Do you want to just ride it up another 10%, 20%, or maybe 100% even? Or do you want to jump on that token, that new project that is the be-all and end-all of everything, and rise by 2,000%? And that is what people are looking for. They are the projects that people want, and these initial stake pool offerings offer that. And you can clearly see from the behavior of a lot of people that are delegating that that is also exactly what they want. So these ISPOs do attract a lot of the delegates to their pools, offer them what they want, and take away from the smaller operators. So this does hurt the network in a way that it starts to centralize delegation to particular parts of the network. But in reality, it is still very robust. It's very safe. It's doing what the protocol should be doing. If people are interested and want to delegate to certain pools, they should be allowed to, and the blockchain should be validating it as so. So that's just how it's set up, and that's totally fine by myself, really. And, we will find out other ways to gain delegates. We're still at the 8 million mark, and we're producing decent amount of blocks every single epoch. But, we can always do more to ensure that we are always safely minting blocks. Around that 30, 40 million mark is a comfortable spot where you know that you're pretty safe in regards to how much delegation you have, that you don't need to worry about the peaks and troughs of the luck cycle. But we'll talk about that in another episode. Now, one of the huge benefits of these ISPOs, and something really good that came out of the Sunday swap one, was that we saw a lot of wallets open up and a lot of ADA move from centralized exchanges over to cold wallets so that they could participate in these ISPOs. At this point in time, it was, for some of these people, it was the very first time they've heard of these token offerings and trying to work out and understand exactly how it all works. So people were moving off in droves, moving off exchanges and putting themselves into cold wallets, setting up Yoroi, setting up Daedalus, whatever it might be, and getting ready to delegate for Sunday Swap. Of course, Sunday Swap hasn't started yet, and a lot of these people have now realized that it could come later. And, they're probably getting used to waiting for it now. But they also realize that there are a lot of other ISPOs that they can participate in right now and earn different token rewards. So it's onboarded a lot of people from exchanges and people that would have never moved any of their ADA from those exchanges because they're participating in the ecosystem there and staking there, but now moving off because they know that there are these real big advantages of getting some of these tokens and getting the 100x, 200x returns from them. So what is the future of initial stake pool offerings and Cardano's unique funding mechanism? Well, you could see from the popularity of these ISPOs and the more and more of these ISPOs popping up that they aren't going anywhere anytime soon. Meld's success in their ISPO, the amount of ADA that they had raised, is a clear indicator that it is possible. Other people are following suit now, and I'm pretty sure at some point in time, some large organizations that have millions and millions, hundreds of millions of dollars can come in and start going through this ISPO process to raise funds for their own project. So we do need to look out for this. It will happen. If you're a small or low saturation stake pool operator, you need to start thinking about how you can leverage the ecosystem, the market, the way the things are at the moment to grow so that you're not cannibalized by these other ISPOs that come in the future and take away delegation again. It's something we'll have to deal with as stake pool operators, and it will come over and over again. Delegates, on the other hand, also need to realize this so that they can support those mission-driven pools, those small operators, those low saturation operators, and help decentralize the Cardano blockchain. So that is my big rundown of what is an ISPO and certain aspects, benefits, pros and cons of them compared to ICOs, IDOs, and how they work in regards to giving up or selling your cryptocurrency for a particular new one. Now, of course, Cardano has multiple different ways to raise funds. It has its own treasury system and self-funding mechanism through Project Catalyst, which will form the future of Cardano's governance layer, the Voltaire era, when we get to that. It also has internal venture capitalist funds, one of them being C Fund and another one called Adaverse from Amerigo that have put in $100 million in regards to development in the cryptocurrency Cardano space in Africa. And that's just in Africa. So it's very interesting how these funding mechanisms are all internal within the Cardano ecosystem. And I'm not surprised Masari or the venture capitalists outside haven't been able to tap in. It's because we can fund ourselves. We can pay for ourselves. We can pay our own way all the way through. It's the community that is supporting and helping and growing this ecosystem as it is. Think about it. It's pretty amazing. All right. So that is it for this podcast episode. If you really enjoyed it, please consider giving us that rating in whatever podcast app that you're listening to. We are actually going to start looking into some of these podcast 2.0 mechanisms where you can actually stream cryptocurrency as payment for listening to these particular podcast episodes. So you don't have to, but you have the ability to donate a couple of Satoshis for every minute that you might be listening to this podcast episode. So it's a very low amount. A Satoshi is worth maybe a couple of cents, really. But as you listen, you can donate those Satoshis. Yes, that's right. So a little bit of Bitcoin, micro fractions of Bitcoin while you listen. So I'll be looking into that and working out exactly how I can implement that. Other ways you can support the show is you can also buy a fungible token. I was corrected. It's not an NFT because I make duplicates of it, but there are fungible tokens of this episode where you can pay for a minting of the episode and you can actually own it within your own cryptocurrency wallet in your ADA wallet. So if it's your Roy or if it's Daedalus or preferably NAMI, you'll be able to actually buy this episode, store it within your wallet and listen to it at any point in time. We have started looking into building an app that runs off certain standards within the Cardano blockchain so that whenever you want to listen to a particular favorite podcaster, reporter, whatever it might be, you can subscribe to their NFT feed, and then if you purchase one of their NFTs, you'll be able to actually listen to their episode. So it's a cool little thing that we're thinking about. Please make sure you join our Discord channel. Again, links to it down below, and follow our updates and progress on these projects. All right, that is it from me for this podcast episode. I promise that's it. Until next time, everyone, please keep your seed phrases safe and secure. Okay, bye.
Yeah, gotta do it like that. You've been listening to the Learn Cardano podcast. Gotta get it hype. Crypto is what we like, but this is not investment or financial advice. Gotta do your research, cause it's risky. We know it is. This show is educational and it's informative. Crypto's the future, really, it ain't no debating. IOHK, Emergo, we're not affiliated, not Cardano Foundation. We just gotta say it, a show that you can learn, and it's for your entertainment. Yeah, you gotta check it, don't wanna be missing that. You were tuned in to the Learn Cardano podcast. Yeah, giving insight, ain't another show like this. When it come to crypto, invest at your own risk. Might not be for everyone, but who it is for, we keep giving you some info and plenty more. Hey, yeah, the Learn Cardano podcast. Hey, yeah, the Learn Cardano podcast. Thank you for tuning in. Keep it locked right here. Let's go.